In the last video, I showed you a deal, a real mortgage note in Indianapolis. A borrower with 40 months of perfect payments, about $180,000 at 8%. And I ask a question, would you buy it? Today I'm going to show you exactly how you find out. Because wanting a deal and being ready to wire money for one are two very different things. This is the part nobody romanticizes, the homework. But it's also the part that separates people who own notes from people who just talk about them. So let's walk through the exact deal, start to finish. What it is, what I check, and what actually happens between yes and the first payment. First, one wrinkle on this particular deal. And I want to take a fear out of it right now. This isn't a traditional mortgage. It's a land contract. You might also hear it called a contract for deed. Here's the difference in plain English. With a regular mortgage, the buyer owns the home and you hold the lien against it. With a land contract, the seller holds the legal title until the loan is paid off, and the buyer holds what's called equitable title. They live there. They're responsible for everything, the taxes, the insurance, the repairs, and they're building towards full ownership with every payment. For you as the investor, it behaves a lot like a note. Somebody pays you every month, secured by that house. There are a few things you check differently. And in Indiana, there are specific rules about how land contracts work and how borrowers are protected. It's not scary, it's just a different doorway into the same house. You learn what to look for, and it opens up a whole pool of deals that other investors skip because they never bother to understand it. So why is the deal even available? An investor asked me to take this note off his hands. It never missed a payment. 40 months. Perfect. So why is he selling something that's clean? Because his business isn't holding loans. It's buying houses, fixing them and selling them. He needs his cash back to do it again. His exit is your entry. The best notes don't come from desperation. They come from someone who simply needs to recycle their money. That's an important thing to understand about this market. A lot of best paper comes from people who create loans as a byproduct of their real business and then sell them to free up capital. You're not preying on anyone. You're the recycling system that lets the whole thing keeps moving. And there's a quiet benefit on his side with understanding, because someday it might be you on the selling end. He sold a note to buy more houses and spread his taxes over years instead of taking the hit all at once. When you sell a property outright, the tax bill lands in year one. When you carry the financing and sell the note later, in this case 40 months later, the gain can spread across the life of the loan that you're holding. I'm not your tax advisor, please talk to yours. But this is the move that most landlords never hear about. File that one away. The seed that you're stepping into has advantages on both ends of the deal. Okay, that's the offer in. So let's say it gets accepted. Now the real work starts. This is due diligence, and it's the heart of everything. Here's every step I take before I wire a single dollar. First, the borrower. Do they actually pay, and can they keep paying? Second, the collateral. Is the house really worth what backs the loan? Third, the seasoning. How long has this been performing? Then, the paperwork, the buyer's equity, and the terms of the loan. 6 steps. Miss one, and you're not investing. You're guessing. Let me put a little meat on each of these. The borrower. I want to see that 40-month pay history in black and white, not just hear about it. The collateral. I want the current value on that Indianapolis house, because the house is what protects me if anything goes wrong. The seasoning, the 40 months of on-time payments, is gold. It tells me this loan has a real track record. The paperwork, is the contract clean, properly recorded, legally sound? The buyer's equity, how much does the borrower have invested? Because a borrower with real skin in the game keeps paying. And then the terms, the rate, the balance, the length, so I know exactly what I'm buying and what it yields. So everything checks out. So what happens next? I negotiate the final price. And remember, on a performing note like this with a perfect history, you're not buying it at 50 cents on the dollar. Good paper trades close to its value. A single-digit discount on a clean, seasoned note is realistic. And that's fine, because what you're buying is certainty. Once we agree, we sign the purchase agreement and we close. Funds gets transferred and we put an assignment in place. That's a document that legally moves the note into my name and it gets recorded. We set the loan up with a licensed servicer, so payments are collected professionally and everything stays compliant. Then the borrower gets a letter, actually two, by law telling them who owns the loan and where to send the payments. That's a real rule called RESPA. And then the first payment shows up. And from that month forward, you're the bank. Now, you might be watching this thinking one of two things. Either that's more than I expected, or that's less scary than I thought. Both are right reactions, and it's exactly why we offer 3 ways in. If you want to learn to do this yourself properly, with guidance, that's our Quiet Wealth Income Builder program. And it ends with you doing a real first deal. If you'd rather skip the homework and just have straight your money working, fully passive, we manage notes for investors and handle every piece of what I just described. And if you're ready to buy your own note and just want a guide on the journey, we do that too. Full control, full yield. The same deal I just walked you through. 3 different doors. Here's the truth I want you to leave with. None of what I just described is genius. It's a checklist. It's repeatable. The first time, it feels like a lot. The 5th time, it feels like a Tuesday. That's the whole secret. There isn't one. There's just a process the banks have used for hundreds of years, and almost nobody told you that you could use it too. If you're new here, this is what we do every week. Real deals, walked through honestly. Subscribe and stick around. And if you want me to actually teach you this, step by step, I built a free 5-day challenge. 1 short lesson a day with no obligation. By day 5, you'll understand this deal better than most people who've owned rentals for decades. The link is right below. Tell me in the comments, what's the one step in this process you want me to go deeper on? I read every answer, and the best questions becomes the next week's video. I see you there.